Good morning. I'm Peter Milios from the Finance News Network. US stocks plunged on Friday following a significantly weaker than expected July jobs report, raising fears of a potential recession. The broad market index dropped 1.84%. The Nasdaq Composite fell 2.43%, pushing its decline from its recent all-time high to over 10%. The Dow Jones Industrial Average tumbled 610.71 points, or 1.51%. At its lowest point during the session, the 30 stock index had fallen 989 points. Turning to US sectors, consumer staples, utilities, and real estate were the only sectors that closed higher on Friday. Consumer discretionary was the worst performer by far, closing lower by over 4.5%. The market downturn followed a report showing that US job growth in July was slower than anticipated, while the unemployment rate climbed to its highest level since October 2021. Non-farm payrolls increased by only 114,000 last month, down from the 179,000 jobs added in June and well below the 185,000 expected by economists surveyed by Dow Jones. The unemployment rate rose to 4.3%. Major tech stocks experienced significant losses, with Amazon falling 8.8% after missing revenue estimates, issuing a disappointing forecast, sparking concerns about big tech's high levels of AI-related capital spending. Intel shares plummeted 26% on Friday, marking their worst day in 50 years. The dramatic decline was triggered by a dismal earnings report and a massive restructuring plan. Nvidia dropped 1.8% following a 6% loss the previous day. However, the sell-off wasn't limited to technology stocks. Banks were hit hard by recession fears, with Bank of America falling 4.9%, and Wells Fargo down 6.4%. It has been a volatile week, with the S&P 500 moving more than 1% in each of the past 3 trading sessions. The stock market had rallied on Wednesday when the Fed hinted at a possible rate cut in its next meeting in September. Following Friday's weak job figures, many investors now believe the central bank should have acted sooner. Turning to commodities, global gold demand surged 4% year-on-year in Q2 2024 to a record 1,258 tonnes, driven by robust OTC investment and continued central bank buying, while jewellery demand contracted due to elevated gold prices. And looking ahead to the Australian landscape, the SPI futures are pointing to a 1.5% fall. Thank you for listening. Have a great Monday.